Good morning et bienvenue. I'm Joanne Jobin with VID Media, and welcome to another VID Town Hall Forum. Today, I'm excited to be here with Radisson Mining Resources. Before we start, I'd like to introduce Chairman Denis Lachance and CFO Hubert Parent-Bouchard, who will provide an update on the company and an outlook for the remainder of 2023. After their presentation, I will moderate submitted questions. Please ensure that you submit your questions to the Q&A tab at the top of your screens. I will publish them, and you will be able to vote them up and down in terms of what you deem most important. Now, a few words on the company. Radisson is committed to generating value for its shareholders through acquisition, exploration, and development of mining projects in a sustainable manner. Radisson is currently pursuing the advancement of the O'Brien project, located on the world-renowned Larder-Lake-Cadillac Break. The O'Brien project was once considered the Abitibi's highest-grade gold producer during its historic production run. And now I'd like to turn it over to the team to provide an update on the company. Gentlemen?
Thank you. Merci beaucoup, Joanne.
Thank you, Joanne. So thank you for all attendees. My name is Hubert Parent-Bouchard. For those of you who know me and might have attended the previous webinar in February, I'll be doing a bit of a page flip here, introducing Radisson to new potential shareholders here or investors. And we'll have an outlook on recent development and what's out there for us in 2023 and 2024. So my pleasure to introduce Radisson Mining Resources, a gold exploration company traded on the TSX Venture under symbol RDS and on the OTCQB under RMRDF. So current market capitalization of Radisson is around $45 million. We currently have a position in cash of $3.4 million, with shares outstanding for around 295 million shares. Management and insiders currently own around 10% of the capital stock, with including 6.8% owned by Michael Gentile. Total institutional ownership of the company is around 20%, including Marshall Precious Metals Fund, Quebec Funds, Conwave AG, who recently joined earlier in August, US Global and US Global. What's somewhat particular about Radisson is that we have a group of around 35 local shareholders in Quebec that own 32% of the company, positioning us with a control over 62% of the share ownership within only 55 hands. So very strong capital structure. So what's the story? The flagship project hosts the former richest mine by grade in Quebec, the former O'Brien mine, that produced close to 600,000 ounces at 15 grams per ton until 1957.
Yeah, thank you, I will step in at this point. Regarding the management, we have a team of 5, including myself. I'm currently acting also as the interim president and CEO. We have our director of geology, Vivien, who joined us July last year. Hubert has been with us for several years. He's our current CFO, and Sylvain Edouard, who are our key master with respect to environment, permitting, and sustainable development. And the last person to join the team is Christina Pilon. Christina is our manager investor relations. She joined us in July, and I can already say that she had a very positive impact joining us and help us with investors. Regarding the board of directors, if we start at the top with myself and Pierre Baudouin, who's a director but also a chief operating officer with Silvercrest. Pierre and I will do, bring a fair amount of expertise with respect to project development, mine startup, metallurgy, and operations. With Michael Gentile and Jeff Swinoga We do cover very well, I mean, the capital market access and strategy, financing, and also accounting. With Siri Jenik, who's the chair of our ESG committee. Siri covers the legal aspect, she's a lawyer, sustainability, and governance. And finally, with Denis Bois, who's a retired teacher, university teacher, we have expertise with respect to environment, methodology, and exploration, geology as well.
Thank you, Denis. So where's O'Brien? The project sits on the Larder-Lake-Cadillac Break in northwestern Quebec, halfway between Rouyn-Noranda and Val-d'Or, two very, quite large mining pool. And in the Cadillac Bousquet mining camp that has returned over 25 million ounces of gold in the last few decades. We're located 600 kilometers northwest of Montreal and 600 kilometers north of Toronto. The project benefits from comprehensive infrastructures, including the Highway 117 that connects Rouyn-Noranda to Val-d'Or, the hydropower that passes directly on site. And here on that map, you can see our head office and the main core shack where we have our exploration team at work on a daily basis, storage for core, and at Bird's View, the Laronde Mill of Agnico Eagle that is located around 2.5 kilometers from the asset. So these infrastructures are very strong benefit for Radisson when it comes to regarding exploration or development. And I'm proud to say that recently we've launched a 10,000 meter drill program that is projected to be completed at around 150 meters all in cost. That compares very well in comparison to remote exploration in the James Bay area, Nevada, or in northwestern BC. So strong advantage for Radisson when it comes time to put money in the ground. Okay, so on that slide, we can see that with comprehensive infrastructures, a large belt comes additional infrastructures, and I'm pointing out here to extra milling capacity in the camp. So within 55 kilometers of the asset, we have more than 5 mills currently running that are not running at full capacity. And the company is essentially, the project is essentially surrounded by best-in-class operators in the name of IAMGOLD with the Westwood mine, Agnico Eagle with the Laronde mine, currently the deepest mine in North America at 3.2 kilometers depth. There's also extra milling capacity in Malartic with the Canadian Malartic / Odyssey operation. In Kena, where West Dome is redeveloping the Kena mine, and in Val-d'Or, where Eldorado is active on the Sigma-Lamaque complex. So at the in the upper portion of that slide, we can see the land package that represents the O'Brien Gold Project. So we own around, again, 5.2 kilometers of the Cadillac Break. That's where the focus has been in recent years. And following the acquisition of the New Alger project, we also acquired 50 square kilometers in the Pontiac sediments. That we'll cover later on in the presentation. So here we have a longitudinal section showing what the property was looking like back in 2019. So essentially 4 kilometers on the Cadillac Break, including the main infrastructures of the former O'Brien mine, and a small resource between surface and 600 meters. So at the time, following multiple rounds of drilling completed by Radisson and its predecessor, we were able to establish a resource of around 400,000 ounces at 8 gram tons on average. With that information, the idea was that the thinking was that we could replicate the former infrastructures from the old O'Brien mine every 300 meters or so, moving to the east on what we call high-grade trends. As you can see here, the mine went down to a depth of 1,100 meters. And the idea was to expand those trends or some of those trends at depth and infill with additional drilling in order to expand the resource and potentially make this a standalone project. And we've been very successful doing so. So between 2019 and the end of 2022, the company completed more than 127 kilometers of drilling for around $25 million investment and acquired the O'Brien West portion of the asset. And on that slide here, we have these pink bubbles and yellow bubbles and red bubbles. They represent high-grade intercept above 3 grams per ton. So with that drill program, the company has been very successful, proving its theory that the former infrastructure from the mine could repeat themselves every 300 meters or so moving to the east. I should recall that if you look at the old O'Brien mine, at the time, they were looking at the conjugated system of veins, where 3 of 14 veins return 90% of the production. That's what we call high-grade trends at the moment. So out of 256 holes, the company obtained more than 200 intercepts above 3 grams per ton. So a very high hit ratio for these type of high-grade narrow vein deposit. So following that drill program in March of this year, we were able to publish a resource update. And I'm glad to say that we've been able to double the ounce count. So we're looking at the 4.5 gram cutoff at around 1 million ounces in the eastern portion of the asset, essentially evenly split between indicated and inferred, with an indicated grade of 10.2 grams per ton, making O'Brien one of the most advanced and highest grade project in Quebec, if not Canada. So here on that slide, we have, again, a longitudinal section showing the indicated resource in pink and inferred resources in yellow. So you can see that the resource has significantly expanded on trend 1 and 2, both at depth and closer to surface. And what's interesting to denote on that slide is that in elevation where we have the greatest drill density, we're reaching around 1,500 ounce per vertical meter on O'Brien East solely. So at this stage, we've completed a scoping study on the deposit, an internal scoping study, and we are already seeing the scale for an economical deposit, and we think that O'Brien eventually could become a standalone mine. If you look at the history of the deposit has grown on average at 3.1 ounce per drill meter. So for a drilling cost, a discovery cost of around $48 per ounce in the ground. That's significant for a company our size. And the idea was, how can we improve and make things better to reduce even reduce further that discovery cost. So last week we announced a 10,000 meter drill program, and I'm proud to say that we are currently, with the modeling expertise we've built in-house, in the help of Vivien Janvier, our director of geology, the company is currently live in its model for the first time in the company's history. So the idea of the 10,000 meter drill program that we just launched is to expand current resources in the vicinity of known high-grade blocks. So Vivien and his team have established a list of 120 targets in the vicinity of resource blocks grading above 4.5 grams per ton. And being live in the model allowed the team to plot every drill holes into the model and rank them on the basis of their potential profitability. So using that method, we think that we can increase our rate of discovery per drill meter, maybe up to 4 ounces per drill meter, which would have a significant impact on our cost of discovery. So on that longitudinal section here, you can see the P1 areas or priority 1 areas where the first 10,000 meter will be completed. So essentially, we're looking at proving the continuity on trend 3 and 4 and filling the gaps at elevation where there's a drilling density that is better drilling density that is required to firm up inferred ounces. On that slide, I should denote that the resource area is open for another 700 meters moving to the east, and that we have strong exploration potential on the western portion of the asset called West O'Brien, which has seen only historical work. Trend 1 and 2 remain open at depth with a very high grade intercept below 1,000 meter on trend 2, and there's strong expansion potential below trend 3 and 4. So we definitely see the potential for more than 2 million ounces here at O'Brien in the resource area. So as I mentioned, the focus in recent years has been focused directly on the Cadillac break, and everything we discuss in that presentation has been on that break. But in addition, last year we started to address the Greenfield potential in the Pontiac sediments. So last summer, or summer of 2022, our team of geologists mapped the entire property. And what's interesting to see is that although there was limited work in the Pontiac sediments historically, they were able to define geological potential similar to the Canadian Malartic and Odyssey complex that is also hosted in the Pontiac sediment, and that has been delivering ounces since the late 2010. As you can see, Canadian Malartic produced more than 13 million ounces since being put in production by the OTCQB group. And currently, Agnico Eagle, the 100% owner of this deposit, is putting around $1 billion in the ground at Odyssey to develop the complex even further. So having a geological context on our end similar to that complex marks for significant potential. In addition to this, the team during that work found a grab sample boulder that graded 7.3 grams ton gold. And based on its shape and angularity, the team estimated that the source of the boulder, would be from less than 1 kilometer. So we explored different routes to try to define as best the potential in the Pontiac sediments, and the solution our team came up with is to do a till sampling program. So the program was split in 2 phases, and phase 1 was recently completed in July, and we're currently waiting for results for the till sampling program for the multi-element analysis and the gold grain counts. So here you have it. What do you invest in Radisson? You're investing in a growing high-grade resource that has proven its potential in recent years with a very low cost of discovery. We're well located amongst the best-in-class producers, and we have a fully funded drill program underway. With that said, I'd like to let our chairman and president and CEO, Denis Lachance, say a few words.
Yeah, thank you, merci, Hubert. So I guess Hubert has clearly well demonstrated what we have done and where we are and where we want to go. I guess we were in Beaver Creek last week. We had 43 meetings, one-to-one, and other meetings. And clearly, I mean, the key takeaways that we want to, again, share with you today are the fact that we have something that makes us, we have a few things that making us unique. We have high grade. We have a largely unexplored property. We are very well located, like Hubert showed. We are next to a provincial highway, and we are halfway between two large cities. We have access to supplies, to contractors, to consultants, to all the expertise that we may need is right next door. We have a very low drilling cost, $150 Canadian all-in per meter drill, and we have a very low discovery cost per ounce as well. We have one of the most advanced projects in Eastern Canada, and that's something that makes us also unique. There have been a lot of interest expressed by corporates in the recent time, and we could see it very clearly last week when we were at Beaver Creek. I'd like at this point to say a few words in French to conclude. Je voudrais remercier les participants, nos actionnaires qui sont avec nous ce matin, nos partenaires et aussi nos parties prenantes. Merci pour participer et merci pour l'engagement. So again, I would like to thank all the participants and particularly the ones that they are close to us and have been supporting us for a long time.
Merci, Denis. Thank you.
Yeah. So, Joanne?
Yes, very good. Thank you very much, gentlemen. That was a fantastic update. I'm sure all of your shareholders will agree. We've got a really nice full room here today, and we have some questions we're going to start off with. So first one is about the resource potential. Where do you see this going, Hubert? Do you see this becoming a multi-million ounce deposit? I know you talked about it being a standalone deposit, standalone mine, but what's your vision? What do you see?
Denis, would you like to say a few words on that front, maybe?
You would have been very good as well to answer that one. But okay, like long story short, we have currently a batting average of 3 ounce discovered per meter drill. This is what we had up to now. Currently, we have a model that predicts that we should get close to 4 ounce per meter drill. On that basis, if we go ahead with the current, we have a 10,000 meters program on the way. We have a 50,000 meters drilling program on the top of it that is currently planned. And we can have another 50,000 meters drilling program that is currently on the back burner. So if ever we'll be drilling all those meters, we'll be adding close to 250, maybe close to, 250,000 ounces of gold could be added to the current resource using a 4.5 grams cutoff. And therefore, I mean, we could be in a very good position within the next 2 years. So this is what we see in terms of potential with the current planning. But definitively, I mean, there's no reason to believe that what we have on this slide now doesn't effectively show that we have maybe 2 million ounces on the east side and maybe another 2 million ounces on the west side.
Excellent. And as you're speaking about drilling programs, I know you've got another one on the back burner, as you mentioned, but what does, how much have you budgeted for your drilling program for 2024? Are you there yet? Are you talking about it?
So I'll leave it by for this one. Yeah. Maybe
I should highlight, again, circling back to the new targeting method. I think we're ahead of the crowd here in the junior space in the sense that we are projecting to add ounces rather than drilling and then evaluate. So that's a significant development for Radisson, at least in my view, because we expect to give more bang for their buck to investors by the money we'll put in the ground. The 10,000 meter drill program that we just announced is projected to be completed at $1.5 million, all in costs. So you're looking at drilling, assaying, site infrastructure, supply, and labor. So we are fully financed for that 10,000 meter drill program, which is essentially a proof of concept for that concept that we're bringing in here now being live in the model. As Denis mentioned, we have already 50,000 meter of drilling plan, more than 120 targets, and the 10,000 meter drill program will address only 20 of these targets, but the ones that were highest ranked, or some of the ones that were highest ranked, the way we ranked and plot those targets in the model. So we feel this is like a proof of concept, and we hope we can do as we did in 2019, lower our cost of capital through that program in order to eventually expand it.
Thank you, Hubert. What is Radisson doing to build awareness of the company in this challenging market? And everybody knows how challenging it is, particularly if you're a junior trying to raise cash these days. Well,
as Denis mentioned earlier on the presentation, we've added Christina Pylan to the team. So Christina is based in Vancouver, and I strongly feel she'll be opening more grounds for us. It's a very, very good addition to the team that is already bearing fruits. And other than that, we're focused, on one-to-one IR, connecting directly with shareholders, new introductions. We have strong connection on the sell side and the buy side already. So when the market picks up again, these connections can be leveraged. And we've obviously had many talks with corporates, especially in this market. I feel that the next round of financing could be strategic, so it's important to keep everyone up to speed on that front.
And speaking of corporates, where do you see the company in the next 5 years? Do you see it standalone, merged, one of these big corporates coming along? Where do you see the company?
Well, maybe I can start, and I could complement for sure. In fact, I will probably say where we could be in the next 2 years to start with. On the basis we have the means to accomplish what we would like to do regarding drilling and project de-risking. We could be in 2 years' time from now, with a resource that could be like with, let's say, 100,000 or maybe 110,000 meters drilling program, adding maybe another 350 to 400 ounces more to the current resource. Therefore, we could be close to 1.5 million ounce, 4.5 grams cutoff. I should mention that if you use a lower cutoff, like 3 grams, which is a cutoff that makes this project economical based on the last scoping study that we have received, you're closer to 1.7 million ounce at 3 grams at that point. So this is where we would like to be 2 years from now, and we can be there. We have a good plan. Regarding project de-risking, we also have a plan, especially focusing on metallurgy. The scope is pretty definitive, and the costs have been established. And would like also to spend a fair amount of time on metallurgy. So in 2 years from now, we could be in a position with a much larger resource project that has been de-risked, and could be on maybe with a P study underway in 2025, for instance, and put us in a position, in 2 years from now that we could consider, seriously our underground exploration program that we have developed, and that exploration program is already all permitted.
Excellent. So we have a couple of questions on cash here. First of all, what is your current cash position, and do you have a view on the cash margin expected from any underground mining operation?
I'll let Hubert start with the cash position and maybe the tax credit that we expect to receive, and I'll maybe follow with the second part, the second question regarding the C1 cost and C3 cost.
So cash currently sits at $3.4 million, and we're expecting around $750K in Quebec mining tax credit. So we're in a good position in the sense that our G&A is fully. We have first of all a very low G&A cost, below $1 million on a yearly basis. So we are fully covered for the next 2 years on that front, and the flow-through funds we have on hand will take us towards the end of the drilling program that should be completed around the late March, early April, and also the till sampling program that is already fully financed. That's where we sit. Future cash margin, we don't have an economical study at this point, so we can't really discuss metrics and etc. But I can tell you, with the work we've done internally, we already said that we see a potential for a standalone project that can deliver it, obviously, with these type of grades, very high margin ounces.
Yeah, well said.
Okay, next question. How is the search for the CEO going? I know, Denis, you're interim CEO, but this is a question that I've seen a few people ask.
That's a very good question. I'm ready for that one for sure. Actually, I mean, to be very transparent, we try to fulfill the full-time position, which it was, by the way, very clear when I did accept. The board asked me to take that interim in last September, that there will be at some point a full-time CEO, and it would be me. I mean, we wanted to have someone full-time, and so we started to look internally with our networks, let's say in April, May, June. And recently we concluded that we should go with a headhunter. So actually, I mean, this morning I've signed a contract with a headhunter based in Toronto for the search, and we expect to be successful and have a full-time CEO before the end of the year. Sorry. Yeah.
Excellent. We really appreciate your filling in as a CEO, of course. Next question. Are there any plans to issue additional shares? This would be, I would expect, in conjunction with any kind of a raise.
I would say, in that market, we're looking at several ways of financing the project or strategic, transaction. Obviously, the charity flow through and the flow through component are ways that help the company, limit dilution when it comes to expanding the exploration side or the tab for exploration. We want to remain active, and we think that we can add ounces in the ground effectively at a very low cost. And on parallel to that, we're always working on ways to lower our cost of capital in difficult markets, obviously. So yes, some flow, an opportunistic window in the months to come regarding a future raise via equity could be considered. We're also looking at other possibilities as well. But first, we'd like to let the drill speak, and we have a lot of development. I mean, corporately ongoing, and with our IR campaign, which we think will have effect on our cost of capital.
Do you have any royalties on the property, or would you consider doing a royalty on the property as part of your raising cash funds efforts?
Well, to reach an answer for that question, first we need to evaluate what would be the price tag for a royalty, and obviously we are, I would say, now that the project has reached that 1 million ounce mark, that we can demonstrate so much potential, that we see a project there. I think we think, in our view, that the project could be mature for a royalty. But in order to consider, we'll have to see what's the value behind a royalty. There's 3% NSR on the western portion of the asset, where we currently have only a small inferred resource. And if you look at O'Brien East, the bulk, actually O'Brien East, including the old O'Brien mine until probably the half of Trend 3 is essentially royalty free. So the resource package, almost, I would say 95% of the resource package is royalty free. So that's a good advantage we have right now and a good position to be in as we look at this opportunity.
I agree. So the big question is, are you going to develop this asset? That's really what people want to know.
Well, I can maybe start on that one. The board made a very clear decision recently that the main focus is still, to grow the resource and unlock the value regarding the potential we have on the property with respect to potential to add more ounces in the current resource perimeter and also outside of the current resource perimeter. At the same time, the board also made a decision to spend more time, more energy, and obviously more money on the project de-risking. So we have a scoping study in hands, and we have currently a rather good, let's say, roadmap from scoping study to P study that we would like to do a fair amount of work internally ourselves. And all that, to leading us to that point where, we could make the decision to be standalone. And you might have said, we have everything, in our hands to be standalone. Already 1 million ounce at 4.5 grams. That's a pretty good start. And if you got an average of 4 ounce added to the resource per meter drill, well, you can see that clearly we can be at 1.4, 1.5 very quickly. So this is what we intend to do.
Okay, it seems the 1 million mark is the benchmark for all development, as we know. So, gentlemen, we don't have any more questions, so we are going to wrap up. But what I would really like to ask you, Denis and Hubert, if you have any last words or any parting words that you would like to say to our audience today, please go ahead.
Well, I would say that we have walked the talk in the recent years and will continue to do so. We will deliver. We have been sometime maybe a bit quiet, but we have been effective and the results are there. And the last thing is, I would say at 17 cents a share this morning, that's quite cheap.
I think, Denis, you're making all the good points. I've never seen so many opportunities as I do today. I know that the market has been tough for the last 2 years for everyone, obviously. But maybe I can pull out that last slide here and can conclude on that one. We've compiled, the gold price in the last 8 years and the high-grade transaction that occurred or the transaction on high-grade asset, single asset producers or high-grade asset at the resource stage that occurred in Canada over the last 8 years. On average, the gold price was around $1,400 US. The average takeover premium was 40%, and the average enterprise value per ounce in the ground was around $250 US. So obviously, in some cases, we're looking at assets that are more advanced than O'Brien at this stage. So then he's making the point, we can continue to advance the project, continue de-risking it, and we're already advanced on that stage in the next 2 years. But if look at the valuation, we're in a $1,900 gold price environment, and current Radisson is currently trading at $35 US per ounce in the ground. Look at that gap. So the idea is to close that gap with the work and we'll be doing in coming months and years. And Denis as well said it, we've delivered and we can deliver, we can continue to deliver. And we thank you for your support.
Yep. Thank you.
Yes. Merci, gentlemen. That was an amazing update. I can see lots of comments in the chat. People are very happy with this update. We're now at the top of the hour. So, Denis and Hubert, merci pour votre temps aujourd'hui, for your time today. This interview and the presentation will be available on the Radisson website as well as all our social media platforms, including our YouTube channel. So before we sign off, could you please ensure that you fill in that quick questionnaire at the end of today's presentation? This helps us and the company communicate more effectively with you for future events and town hall forums. Thanks and merci to everyone tuning in.
Yep.
We look forward to seeing you and hearing from you on the next VID Town Hall Forum. Goodbye, everyone.
Merci beaucoup, Joanne. Thank you all. Merci beaucoup.
Thank you.